Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
We've got about 3 companies now that we're going to talk about, companies that you may want to keep your eye on, reporting earnings this week of May the 9th. Eric Dutram, our editor of Surprise Trader, is going to give us the lowdown on each of these. These are 3 in 3 different industries, starting with NVDA.
Yeah,
right?
we got 3 companies, a little spread out, but they're 3 names that I think a lot of investors and even consumers have heard of. So, these should definitely be the ones to watch here over the next couple of days. We're sort of winding down with earnings season, so pickings are a little slimmer, but some of these companies are definitely going to be ones to watch. NVIDIA, NVDA is the symbol there. They actually report on Thursday after the bell. We're looking for 31 cents a share in earnings for this company. They are a Zacks rank number 2 buy, so they are looking pretty good heading into the report. If we do look to their recent price and consensus chart, we can see some of the moves here for the analyst expectations. They've been pretty extreme, both down. We saw 2015 sort of the numbers come back down here for the consensus earnings estimates, but then 2016 we've seen a nice rise here. Interesting thing to note about NVIDIA, they actually have a 0% for the earnings ESP right now, but for the next quarter, it's at about 9.4%. So analysts are starting to raise their estimates for next quarter. They're actually developing this new chip. It's supposed to launch later in the month. It's actually like a next generation product. It's going to really, hopefully at least for NVIDIA, boost their bottom line and really be their go-to product. So this is definitely going to be one to watch for more of a future outlook than the current report. And I know actually on 2 p.m. on Thursday, Dave Bartosiak is going to be doing a Facebook Live thing talking about NVIDIA, more in-depth earnings preview. So the viewers should go out and check that out at 2 p.m. Central Time.
All right. Then there's Electronic Arts. Now, did I read correctly a story in Forbes where Electronic Arts is predicting the death of game consoles?
Well, it seems a little extreme, but we are seeing a lot of different trends in the gaming world lately. There are a lot more mobile platforms, but I think the idea of the end of the console seems a little overdone to me at this point. I know EA still has a ton of popular games out there, but as we can see in their 5-year chart here, there might be a little bit more truth to that than you might think, just because the stock was at like $11 back in 2013, 2014. EA saw an incredible run here. It's quadrupled over the past 2 years. And sort of speaking to what you were just saying, shares have kind of flattened out here over the last 12, 18 months. So it's really going to be a question of where you get this growth now that more people are doing mobile games. Mobile games aren't really as lucrative as some of their big name ones they had before. We do see that EA has a great history in earnings season. They haven't missed since back here in 2013. So we do have a earnings ESP of 6.6%. Add that with a Zacks rank 3, and it does appear that we'll get another positive surprise here, but it's going to be a question of the outlook for this company and, can they sort of break out of this malaise that they've been in for about 12 to 15 months.
Yeah, and then there's Disney, right, on your radar. They report Tuesday, May 10th?
Yes. Disney also reports on Tuesday. This is going to be one to watch for their outlook, and also in terms of specifics, their ESPN subscribers, that's become a real drag on shares over the last 12 to 18 months.
Yeah.
People are starting to really worry about that as more people cut the cord, and Disney's ESPN division is a real big area of growth, or at least it used to be.
Yep.
And so replacing that's going to be key. Marvel has been a huge coup for Disney. We've seen plenty of great movies from them, and they've all been pretty profitable. So continuing that trend is going to be really important. If we look to the chart, Disney has a really great track record in earnings season. You can barely see over here on the left side their latest miss, and that was back in 2011. So it's been a great run here for Disney. The price and consensus chart is exactly what you want to see year after year. Their estimates are raising, and we can see estimates have come back a bit over the last 3 or 4 months here. Shares sort of bottomed out here, hopefully, and now we're back up to $100 a share. The current ESP is negative, so that's not a great sign, but it's really going to come down to ESPN for Disney. And just for full disclosure, Disney is in my personal portfolio.
Okay. Do you think with Disney this is more a situation of let's just see whether what has been working still is?
Definitely, at least for their movie division. But that really has gotten overshadowed by ESPN and their cable troubles. So it's kind of a tale of two companies within one company. So ESPN's really going to have to come back to boost shares.
All right, thanks for that. And check out more earnings information on our website, Zacks.com. If you're not there already watching this video and the others that we produce, why, you can link to that information right off the homepage, Zacks.com. With Eric, I'm Terry Ruffalo.